Into Chartbusters. Well, let's welcome our next guest on the show, Rainbow Children's Medicare. Well, that's in focus after reporting its Q1 numbers. Revenue saw good growth, but the company sees some bit of pressure on the margin front. We have with us Dr. Ramesh, the CMD at the company, at the hospital, in fact, to join us on the show. Hi, Dr. Ramesh. Good morning. Thanks so much for speaking to us here on CNBC-TV18. Well, just going through your numbers, occupancy seem to be a little bit lower. So could you clarify if it's because of a seasonal factor that plays out? That's why occupancies were lower. And your ARPOB, well, that has moved up closer to around 60,000 odd. What's the guidance on both these two numbers going ahead, occupancy and ARPOB?
So generally, naturally this Q1 is seasonally kind of muted. That's because of most of the families move out of the cities and go on holidays and native places. That's very, very common. For a long time, we've been witnessing that. So the second important is fairly healthy season. And also that, we have a supply of the beds also. We have 2 units started. It's almost about 12% of the beds added to the kitty. So a combination of these things together, kind of, we are kind of talking about 41% of occupancy. So regarding the ARPOB, ARPOBs are higher, almost 12% growth. That's primarily because of a shorter ALRs. So dominantly what we do is in this season, one is a pediatric surgical cases, and we have a large delivery volumes. Both of them have the ALRs are low, and also the kind of the revenue per day is higher. So that kind of gives a kind of ARPOB almost closer to 60,000.
So on both these fronts, Dr. Kancharla, what is it that you can guide for now that, there would be seasons where occupancy is likely to increase with you having higher headroom in terms of number of rooms as well, and with a higher proportion of revenue coming in from, more complex surgeries which are higher revenue generating for you? What is the likelihood of, occupancies and ARPOB increasing going forward? What's your target?
So, Mangalam, what happens is that, business is that, at 41% of occupancies, we are talking about pre-end EBITDA close to 25. And when kind of the same scenarios shift to the 50%, not the 50% of occupancies, that really gives us the big EBITDA. Because all the operating parameters will fire.
Yes.
So that's what really is going to come, really give a big EBITDA and also the margins. So an averaging of that, the occupancies to the highest occupancies, that the 10% delta is going to give us a significant revenues as well as the EBITDA. So that's our business model overall. When you go back and see last year, you'll see the stunning to the same pattern. So when you do it for not the 50% occupancies, our numbers are really probably kind of very close to industry best.
So Dr. Ramesh, going ahead, what kind of a number should we look at on both these two parameters for the year? Give us for the year on the whole, what should be the average occupancy? What should be the average ARPOB? And also I recall when I came down to your hospitals, a few months ago, international business was very small as a percentage of your total revenues. Are you seeing a higher amount of traction on that front?
I think in terms of guidance, what we see is that we would expect to do north of 50% of occupancy. That's what we are aiming. And also the kind of when you look at the year long the ARPOB, the growth of about 6 to 7% will be there from last year to this year. The international business, I think it was very, very minuscule before. Now things are improving now. I think we've got 5-6 countries, the affiliations started with the governments, and also we are expecting that our international business to be around 3 to 4% this year. So that's one of the main focus, because we are doing a lot of specialty surgeries like transplants, cardiacs, more than one centers we are doing it. So that's going to be a major focus for us as we move forward into the year.
So with all of this, your margins go back to that 33 to 35% band that we've seen annually, or do they stay lower because of the influx of newer hospitals and the investments that you're making?
I think we are expecting about 270 beds are going to come in this financial year. So obviously that when you have about almost about 20-25% of the new beds, the kind of we can expect some degree of kind of margin pressure. Still, as we always say about doing about 24-25% of a pre-Ind AS EBITDA is a kind of a possible because of number of mature units.
All right. Thanks a lot, Doctor, for joining in and giving us the guidance for your business. Wish you good luck for your business and the remainder of this year as well. With that, we take a short break, come back, talk about the individual stocks and markets on the other side.